What is going on, guys? How are you doing? This is Aetherium Crypto and welcome back to another video. So in today's video I'm just going to do a quick market update, have a look at the market, the main player Bitcoin, and also I found a few very interesting articles that I thought to talk on. So without further ado, let's get straight into it. So first and foremost, we have Bitcoin over here. On a weekly, we have been descending ever so slightly since the beginning of June, and we've just bounced off of some support at this moment now. But volume has been drying up very much so in the last few weeks, and if we don't get some more volume anytime soon, then we're just going to keep dropping and dropping. Potentially up until the higher 8,000 level. It's looking quite boring, to be honest, and the volatility has been very low. And also I'm a little bit concerned because of what's happening with a potential second wave with coronavirus, and this could very much negatively affect the Bitcoin market and the cryptocurrency market as a whole. Because all the markets are interconnected. Crypto market has done quite well to recover from the massive dip or the massive crash of February time or March time, but still they are correlated. So if this second wave comes in hard, then I think the crypto market will also get affected. With that out the way, the rest of the market is looking pretty dead as well. XRP also has been dropping similarly to Bitcoin. If it keeps going, it'll probably end up going to the next monthly support level at 16.5. And also Ethereum has been dropping as well. Same way as Bitcoin, it's found support at this 225 level. If that doesn't hold, then we'll be going back, retesting that long-term trend line with the candle closure. But with the technical analysis out of the way, so overall it's looking very dead. Let's move on to some interesting articles. So central bank digital currencies could be next step in evolution of money from the Bank of International Settlement report. So what they said in the new annual economic report, the BIS reveals that central banks are well positioned to trigger innovative changes in the current payment infrastructure. Now, again, for those of us within the crypto space, we've been hearing about this for a little while, about CBDCs, digital dollar, digital yuan, and even digital euro. So this has very much been in the pipeline. CBDCs combine this innovative technology with the tried and tested foundation of central banks. It is the central bank's choice to harness these forces for the common good. They can combine their role as catalysts, overseers, and operators and develop an entirely new set of payment arrangements that are run on digital currencies. CBDCs may be based on blockchain technology, probably not, as it won't be decentralized. Which powers cryptocurrencies to create digital versions of traditional fiat money. They have been compared to stablecoins and are designed to enable quick and easy domestic and cross-border transactions 24 hours a day. Now, this whole cross-border transactions, I do believe that will be the case, especially with the high-volume CBDCs that they could create, like the euro and the dollar. They're probably going to have a system where they can just transact very easily. But when it comes to the smaller currencies, I don't think it's going to be that efficient. They still need something like XRP to communicate with the different payment networks, because they're still going to be networks on their own, unless they create one giant global distributed ledger, which they're not going to create. But the 24 hours a day, yeah, of course. Such an innovation would provide general users with direct access to central bank money and potentially offer a safe, reliable, and universally accessible settlement instrument, just as cash does now. I agree to some degree, but with cash, it's completely anonymous. That's the big difference. There's no tracking with cash. You can't track someone paying with cash. Whereas with CBDCs, it will be completely tracked. There's no privacy, and that's a massive difference. The benefits would have to be carefully weighed against the implications for the functioning of the financial system, such as the risk of disintermediation, including accelerating bank runs at times of stress and potentially large central bank footprint in the financial system. So the bank runs, of course, they're going to be very scared about that because, for example, during this COVID-19 pandemic, if the banks had CBDCs, then the money would have been very easily removed by the actual customers, and that would have absolutely finished the banks because we all know that they don't actually have any money in the bank, or a very, very small amount of money in the bank. So a bank run would destroy most banks, and they don't want this. So, but you know, with the CBDCs, I imagine they would have a lot of control, so they could simply just, you know, press a button and say, sorry, you can only take out a little bit. So I don't imagine that to be a massive issue when they do come out. The basic elements are trust in the issuing entity, legal tender status, guaranteed real-time finality, and wide availability. Yeah, I'm sure they can incorporate all of this. That probably won't be a problem. In addition, the BIS points out that CBDCs must be user-friendly, resilient against cyber attacks, and counterfeit-proof. I'm sure they will sort that out very easily. The main difference, in my opinion, is going to be the fact that cash, again, can't be traced. It's completely anonymous, and you can't track that. You know, there's a lot of privacy attached to cash. Whereas CBDCs are going to be completely digital, and so you know they can track every step, every transaction. They'll probably say that that's not going to be the case, but we all know that they'll probably lie about that, and they will, you know, track if they need to, if they have permission to, which they will get if they need to. So that's the big difference. Moving on to the next article. Well, thieves are now mixing stash of $170 million worth of ETH, says crypto researcher. The thieves behind one of the most notorious scams in crypto history appeared to be working hard to obscure a huge trove of stolen Ethereum. A pseudonymous, I'm not sure I'd say that to be honest, but I know what I mean. A researcher who goes by the name Frank says operators of the $2.9 billion plush token Ponzi scheme have come to life and are cycling their ETH stash through mixers. Firstly, this researcher, who we don't know the identity of, who's given information to help find or track these people. I mean, can we really trust this source if we don't know who it is? They could, I mean, they could really be an insider of this Ponzi scheme, feeding out information to, you know, that isn't real or false information to throw people off their track. So I don't know. I don't trust this pseudo researcher if they are anonymous, because although it seems like they're, you know, obviously providing important information to help track these transactions, I don't know. I mean, it could really be anyone. It literally could be someone who's trying to help these thieves and give people false information. How would we know? So yeah, so the basic article is about that they've made thousands of addresses and are doing loads of little transactions to throw people off their track. And yeah, so mixing, which is what they're doing with these addresses, makes transactions more anonymous by shuffling one's user crypto assets with a bunch of other coins and then sending smaller units to separate wallet destinations. process is designed to give legitimate crypto user privacy, but can also allow bad access to hide criminal activity. He says that there are 3,800 addresses that currently store an average of 140 ETH, which means these scammers are trying to move 533,000 ETH worth 117 million. Crypto researcher expects the mixing to continue, suggesting that criminals plan to use even more wallets containing a handful of ETH so they can liquidate the stash through exchanges without arousing suspicion. So it sounds like it's going to be a slow process, and they probably will get their money out. It's unfortunate, but again, make sure you keep your crypto on things like Trezor or Nano Ledger, because and just do your own research when you look at these schemes or these different crypto projects, because things like this will happen. You get duped. But if you did proper research, you'll probably see that, okay, this doesn't really make sense. But again, even if there's this Ponzi scheme that's just such a high level, like it actually fools people that have done proper research, then the next step is always, invest what you can afford to lose, so that if it does happen, you're all right. It's not going to be the end of your life. So yeah, that's what's happening on that side. Next article: financial giant SBI launching crypto asset fund featuring 50% XRP allocation. For the XRP army, this is fantastic, but also for the other two big coins. Japanese financial giant SBI Holdings says it plans to create a new crypto asset fund that features a 50% allocation to Ripple's native token XRP. In a new briefing, the financial giant says that crypto asset fund is expected to launch in the coming months. The other half of the fund will feature a 30% Bitcoin allocation and 20% Ethereum allocation. So the big three cryptocurrencies. So it's going to be, within crypto realm, fairly safe allocation. And it's good that it's been spread amongst the top three, mainly XRP. Obviously, this firm is in partnership with Ripple, so obviously they're going to do that. But also they are exposing themselves to the other two main cryptocurrencies. So it seems like a fairly good allocation. It would have been nice if they even included like a 5-10% of the other altcoins, because there are some other good ones. But obviously this is, again, in the crypto realm, a fairly safe allocation, or fairly safe, diverse fund. And lastly, we have China's first blockchain-based bidding system. China's first blockchain-based bidding system launches, and it's dubbed as Kunyilian. The platform allows public and private companies to bid on government projects and secure resources allocated by the government. These resources include capital, technology, and infrastructure. Since its testing phase, Kunyilian registered nearly 60,000 blockchain certificates. The system will allow more than 30,000 organizations to bid for the government resources in the province of Kunming. Kunyilian relies on blockchain as a service technology developed by Chinese tech company Tencent, one of the biggest companies in China, along with Alibaba and another third one, I believe. The platform is expected to facilitate data sharing and increase security while validating the credibility of the entities involved in the bidding process. So again, China are absolutely steamrolling ahead with blockchain and cryptocurrency. The US, the EU are really lagging behind. They are so far ahead now, and it does worry me. I still don't know if I would trust a Chinese blockchain, even though it's supposed to be decentralized. I just, China just they just pump out a lot of fake data. So I don't know if, obviously, because China is such a large market, they've got a lot of companies that they can use the service with. Obviously, what they say, yeah, but as I said, it will allow 30,000 organizations to bid for government resources. So obviously, they have a large market to use this service to. So they won't struggle to find any people to use it, organizations to use it. But for the rest of the world, I don't think a lot of people would trust anything that comes out of China. And yeah, so the rest of the world is absolutely lagging behind. China understand the potential of blockchain, and they are not wasting any time. So on that note, I'll finish this video off. Thank you for watching. If you haven't already done so, please subscribe and follow me on Twitter and Instagram. And yeah, peace.